And we are live. This is Travis from Carter Cow Capital Trade with Travis, Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Tuesday morning. First official day of trading for the week for the United States. Banks or everything else are open. Let's go ahead and get through the disclaimer. And then after that, we'll go ahead and get through everything else. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from that education, you can be able to make your own informed decision. I understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So before we end up getting started, do me a favor for the people that are watching online live right now, as we end up getting done, type in and let me know if my sound is good. Just type in good or yes or anything else like that, just to make sure that my sound is good. If I need to adjust it, then I go ahead and adjust it. And also make sure that you end up saying, hey, it's always good to be able to talk to everyone out there as we go through and get everything else. This is episode 244 of Trade with Travis. Now, how did I get with 244? I ended up taking a look at all of the videos that I ended up having on Trade with Travis since the first time that we ended up doing this via YouTube, and the first time that we ended up doing this via Trading View. And we've done over 244 different videos, or 243 different videos. We're at episode 244 at this particular point. For the people that have been watching since the beginning, thank you for being able to watch. For the people that end up watching at the beginning of the summer, once again, very much appreciated to be able to talk to each and every one of y'all. Speaking of each and every one of y'all, here we go. Let's go ahead and make sure we end up saying, hey, hope everybody's doing very well as we end up going through this overall trading day. Once again, make sure, let me know if our sound is good as we end up getting everything else done. Today's going to end up being a quick session. But yesterday we didn't have that much trading. I told everybody that probably wasn't going to end up trading all that much yesterday just because of how everything was kind of playing out. But we will talk about how everything is. If you have a trading pair that you would like to be able to take a look at, make sure that you end up placing inside of the chat box. Obviously, love to be able to answer your questions and everything else as we go through. All right, cool. So, what's happening today on the economic calendar? We have a fundamentals day, meaning that we have more high impact news that's going to end up happening throughout the overall day between three or more countries. We have three or more high impact news between three or more countries overall. Earlier today, we ended up having climate count change for the pounds. Those numbers actually end up being pretty good. The interest rate, the climate count rate, actually ended up raising up just a basis point. The unemployment rate ended up remaining to be the same. So that kind of is going to end up affecting how we end up taking a look at the pound. I will take a look at the pound United States dollar. We'll see how that kind of reacted overall. And when it comes down to movement, and we'll take a look at the United States dollar index, obviously, as we look at that at the big three pair. Um, then after that, we end up having the eurozone end up having index of consumer prices that end up being the same. We have CPI data that's going to end up coming out at 8:30 for the Canadian dollar. We'll take a look at that and see how that correlates with oil and what's happening with that. Interested to be able to see what that is. It's suspected that it's going to end up rising up a little bit, so we'll see how that goes. And then after that, a little bit later on tonight, we're going to end up having the interest rate from the Bank of Japan and being able to see what their interest rate is going to end up being. Currently, right now, we still have a negative rate of negative 0.1. So we'll see how that kind of affects everything. Today, just being honest, knowing how the market kind of moves. Tomorrow, we know that we have retail sales that's going to come out for United States dollars. So if we take a look at U.S. based pairs as a person that has been trading for a while, or for a person that is kind of new and you're trying to understand the game, understand that anytime that we end up having high impact news that is a day before, you probably might end up getting a flash move from the United States base pairs, but it will quickly start to kind of fizzle out, and it will start to get into some consolidation. So don't be surprised that there may not be that many trading opportunities that may end up presenting itself when it comes down to United States base pairs. Every other pairs you may end up seeing something, but just taking a look at United States base pairs, you probably won't find them. So there we go. Just being honest, type in a Y or yes if that makes sense as we go through before we end up taking a look at the charts, if that makes sense overall when it comes down to United States base pairs, that you probably might not see that many opportunities as we go through. We are in day 8 for me when it comes down to the My Forex Funds challenge and being able to go from there. I'll talk about my progress and everything else with using that, doing that with an algo system. And It's doing very well at this point currently, has done very well overall. The biggest thing is just trying to see how we can be able to maintain it. Obviously, my Forex funds, you got to be able to get 8%. So we're trying to work through that and trying to put all that stuff together as well, and kind of going from there. All right, cool. So United States dollar index, let's go ahead and get into it. We already did the weekly yesterday, so we're going to go ahead and talk about the daily. We know that the weekly is in the buy zone. We take a look at what's happening with the daily. The daily is actually also in the buy zone as well. We ended up getting into a trade last week saying that if the market ended up breaking below 12,814, then we wanted to be in a sale. We expected that the market was going to end up going down to 12,630. But we also ended up saying yesterday was that because there was going to end up being a lack of news, and more than likely we're probably going to end up seeing some consolidation. I wanted to be able to take some money off the table and start using that as profit instead of being able to hold and stay in this overall pair. We can currently see that the market is starting to give a little bit of a U-turn, and we can see that it's in the buy zone, which means that more than likely going into today, going into tomorrow, that may end up, if we end up getting any good news from the retail sales from December, you may see this market continue to keep on popping up to the upside. So I ended up taking profit right around 12,710, and end up, I still have one more pair that's still out there overall, but I'm still looking at being able to possibly say I'm just going to look at being able to take profit and just kind of close out on everything before the news comes out tomorrow. Typically, when it comes down to high impact news, I do that anyway. But overall, if you're looking at being able to trade this, I want you to understand this. The weekly is in the buy zone. The daily is in the buy zone. So if you're selling, we're getting close to a transition trade. If you don't know what a transition trade is, essentially what that means is the weekly and the daily are in the buy zone. You've had a substantial amount of movement to the opposite direction, whether if it's bullish or bearish. In this case, it's been bearish. And we could see that over the course of the next 7 to 11 days when it comes down to the stochastic for buy trades, and over the course of the next 3 to 4 months, over the case from a weekly standpoint, that the United States dollar may start to recover and gain strength. Now, there has to be a catalyst. That catalyst has not been proven yet. Because we don't have that catalyst, the market is still remaining to be bearish. But for right now, kind of slim pickings on this move. I'm not going to end up being interested in being able to make any move off of that one. Seeing a little bit of a triangle, maybe that might end up kind of holding off, but no move on this one as of yet. We was in that sale. You're still in that sale. I'll probably look at being able to. I'll still probably look at being able to take profit on this one. And get out of that. Let's go to oil. Oil still in big consolidation. I said that I wasn't going to end up making any moves until this market ended up breaking above 82.50. Currently, right now, we can see that oil is still in consolidation from $70 a barrel to 82.50. Until it ends up breaking out of one of those positions, there's really no move to be able to make. So very simple on this one. We know that from an economic standpoint, we know that we end up having CPI data that's going to end up coming out at 8:30, and maybe that might be a catalyst to be able to see this market kind of move up to the upside because oil has a strong correlation with the Canadian dollar. But currently, right now, no movement until this market ends up breaking out of this area. If you've been on this channel, if you watch what we have been talking about over the course of the last legitimately about 6 to 7 months, we've been talking about mainly being able to understand ratios and being able to go, or not ratios, being able to understand win probability and spacing and everything else like that. Anytime that you're inside of consolidation, what's going on, Brian? What's going on, Block? Both of y'all already know this. Both of y'all already know this answer. So I'm gonna ask y'all this question so everybody can be able to know. Inside of consolidation, what percentage chance do you have to be able to win? What's your max percentage chance of being able to win inside of consolidation? As many times as I've said it, it's probably done been the same. Fatty, you probably done heard me say it plenty of times too. Inside of consolidation, what's your percentage chance of being able to win? Hey man, y'all been around me too long. 33%. You got right around a 33% chance of being able to win. And I'm sorry, I don't like 33% chances of being able to win. That leaves too much of a chance to be able to win when you're just trading inside of areas like that. So as soon as you end up breaking outside of that consolidation, you go from having a 33% chance of being able to win to a 70% chance of being able to win, especially if you end up catching it right outside of the breakout. I'm not interested in oil at this particular point. We'll go ahead and move forward when it comes down to that. All right. Let's go ahead and go into gold real quick. gold has started to slow down just a little bit. I think the retail sales is probably going to end up being something that's going to continue to see how the market is going to end up moving based off of that. Uh, from a weekly perspective, we can see that gold has broken every resistance point, and the last resistance point that is still out there that we should be able to see that the market could potentially get up to is 2070. But remember, the United States dollar index is in the buy zone on both pairs, and we're starting to see that. If we take a look at this, the okay, that's ugly. Let's try this one more time. Make it a little bit more transparent and give it a little bit of color. We start to see that gold is getting a little bit overbought as well. Basically, it's basically saying that the United States dollar is kind of due for a little bit of a retracement, a little bit of strength. I believe that's probably going to end up happening as well. We take a look at it from a weekly perspective, we can see that it's in the sell zone. Take a look at it from a daily perspective, we can see that it's in the sell zone as well. All of these things are lining up to be able to tell you that the United States dollar, if we end up getting any good retail sales, it's going to end up having a strong retracement. At least for the first week overall when it comes down to movements. That spells as good things to be able to take a look at, Brian, especially when it comes down to the challenges and everything else like that. When it comes down to movement, because especially if we end up getting that movement overall this week and next week, then I think that everybody will be okay with being able to hit the overall percentage point that they have to be able to get when it comes down to profit rating. But currently, right now, I wouldn't do anything with gold either as we go through. Bitcoin, let's take a look at that. I think Bitcoin slowed down a little bit. I'm almost certain Bitcoin slowed down a little bit. I haven't been getting all those messages on Facebook talking about how everybody is crypto kings and everything else like that. Um, yeah, we got a little bit of a slow movement overall. I think retail sales is probably going to end up being going to end up being some type of big news going into tomorrow. Um, Market, this is kind of summarize this. Market broke above 1718. As soon as it broke above that spot, we end up saying that 18,240 was the next spot. And after that, 18,870, 19,660, and then after that, 20,370. Since then, the market has broke all of those positions. The market is going to have to retrace a little bit first. I'm expecting that it's going to retrace right back to the mean or right back to this overall position right here in the middle. First, I think block, you end up saying 19,400. I'm saying 19,670, somewhere around that area for the market to be able to retrace back to before being able to go. I think you end up doing it based off of a 200-day moving average. You said your 200-day moving average, if I remember correctly, was right around 19,400. Is that correct? While he goes through and answers that question, I still believe that this market is going to have to fall a little bit, have a little bit of retracement first, and then after that, you'll start seeing the movement. Um, and we'll kind of go from there. So we're talking about probably about 7 to 11 days for overall mainly retracement. Typically with Bitcoin, when it's humming, is typically on the lower side. So you're talking about maybe 4 to 7 days of overall downside movement, unless there's some type of good news overall. So even with this, I know I'm not necessarily showing the full chart and everything else, but I do expect that the market's going to retrace first, and when it retraces, then after that's going out to 22,750, and then after that going back up to the highs of 25. And if it breaks past 25, then it's going to rocket up to 29 very quickly. So if you have not made a move off of this one as of yet, this dip will probably end up being probably the last time that you might see that the market will stay in between the 19s or the teens when it comes down to movements overall. So take a look at the counter trend line break, see how the market kind of reacts based off of that, and then after that, make your move from there. Uh, Obviously, be patient, but you want to see any type of counter trend line break that may end up happening based off of this movement. But I'm not chasing it. There's no reason to chase it at this particular point. Um, since the pounds end up having their news come out, we'll take a look at the pound United States dollar, see what ended up happening based off of that movement earlier today. This is a clean chart, so we'll go ahead and start this from the beginning. We'll do some type of top-down analysis so everybody can be able to see it. You're not familiar with top-down analysis. Essentially, what that is where you end up going, doing the weekly, going through the daily. You want to make sure that you end up having time frame alignment. If you don't know what time frame alignment is, essentially what that is, hold on, give me a second. Time frame alignment is when the weekly and the daily are basically trading in the same direction. Oh, excuse me. Let's see. Time frame alignments when the weekly and the daily are trading in the same direction. I do not take any type of trade manually unless the weekly and the daily are trading in the same direction. If they're not, then I'm not going to do anything. I'm in a pound United States pound and pound yen buy and profit. If you have a chance, can you give them a peek? As soon as you end up writing that down, we end up talking about it. Fatty, I got you. There we go. Cool. I want to see what's going on with pound yen anyway. Um, I think I'm going to end up creating a bot based off of pound yen, or I think I'm going to update the. I think I'm going to update the Boss EA based off of pound yen. Um, you did say that, and I did say that as well. Block you. I did say that as well. Yes. So I'm going to stick to my guns off of that one. Aside from here, definitely aside from here. Fatty Block ended up saying no manual trades this year. I said that. I said that was my one resolution this year. Uh, the only manual trades that I would like to be able to take is inside of this room. Overall, I know that definitely ended up working out for me and Brian. Um, yeah, I like to make my money in my sleep. All right, so here we go. Pound United States. Where did this come from? Oh, okay, cool. From a weekly perspective, we see that the market was truly bearish. We can see that overall that the market has been bearish overall. Um, Since then, the market has pushed up. Currently, right now, if we take a look at it from a ranking perspective, it's in a R6 zone. If you're not familiar with an R6 zone, um, I ended up creating a video, I want to say about 2 years ago now, being able to talk about how the market, there's 6 different spots that the market is basically in. R1, R1 is where the market is. I'm going to box this out real quick, and I'm going to make this very quick when I say this. Come on, box. R1 is when the market is in the sweet spot, 618, 786, and 86. Um, sleep money is the best money. Yes, sir. Amen to that. 618, 86, and 786 is the R1 position. Now, R1 positions or R2 positions are kind of different. The main difference is that if the market ends up getting up to the 618, 786, and 86 with a counter trend line break, that considers that to be a R2 type of ranking. Now, when the market's in an R2 ranking, that is the second highest trade that you can be able to take, the second most profitable trade that you can be able to take. And that happens before the market goes into a B. A R3 trade is when the market ends up breaking below the B and it's going towards its overall take profit. Anytime that the market's below that and it's below the B and you end up getting a clear direction and you see that it's going into the push zone, that's when you end up having a R3 trade. A R3 trade, in my mind, is the best trade you can be able to take because you know direction, you know that you have time frame alignment, you know with the in the right settings, the market is going to end up giving you a high probability of being able to win when it comes down to those positions. A R4 trade is when the market's in consolidation. A R5 trade is when the market has hit its overall de-extension and is starting to retrace. In my mind, that's the second worst trade. A R6 trade is where we're at currently right now, where the market retracing, is retracing at this particular point, but it has not hit the sweet spot, and we do know what the direction actually is. If we're looking at this from a long-term perspective, Fatty, this would be a R6 trade, which means that it's in a no trade zone for me. Now, keep that in mind. That's the reason why. It's the reason why I end up bringing it up. Or there's a reason why I end up bringing this up. If we take a look at this from a daily position, we can see that overall, this market has a little bit more room for movement to the upside if you're thinking that the market is going to continue to go bullish. But let's go back to what we ended up talking about a little bit earlier. We always take a look at the United States dollar index first as a way of being able to understand what's going to happen with the United States dollar. We end up saying that the weekly and the daily are basically in positions to where they're in the buy zone to where there could be somewhat of a U-turn overall. I do believe that today and possibly tomorrow that you still could possibly be able to get squeeze some movement out of that. But be wary of what could potentially end up happening. There's a counter trend line break, but the market is in the sell zone. I will say that overall, this is the first time this week that we're going to end up having a lot more trading. So a lot of volatility is probably going to end up cutting in today. So be weary about what you're doing with your trades on this one, Fatty. On pound United States dollar. Pound yen may be a little bit different, but pound United States dollar, I probably look at being able to cut that one short, depending on where you're trying to think it's going to end up going. Especially with today, probably going to end up being a little bit more of a slower day when it comes down to United States based type of movement. It might be a flash in the pan, but I think it's going to end up being slow. So with that being said, me personally, I'm not going to do anything with pound United States dollar. Let's go pound yen real quick. For the people that are watching, did that make sense? Did that make sense? The reason why I decided not to pursue taking a look at trade on that. If it didn't, I'll try to see if I can explain a little bit more. But me personally, that's not a trade. Not pound United States is not a trade for me today. My internet is acting up on. All right. I don't know what my chart is, but we did pound yen after last time. Oh, there it is. All right, so if I remember the last time we ended up talking about pound yen, I ended up saying, okay, the market ended up having a strong consolidation between 168.50 and 159.40. Market ended up breaking below 159.40 yesterday, but it started to be able to build out another consolidation point, which is kind of weird. Taking a look at it at this point. You said that you had buys, so I'm guessing that you end up buying it right at the support, knowing that the way that you trade. Based off of our talks, I think that you're more, you really like being able to play the supply and demand game. So I am guessing, without even taking a look at your trades, or without even you telling me what position you end up getting in at, it was somewhat around. I'm not even going to look at your comment yet. Let me see if I can get this right. You probably end up catching it right around 156. Yep, there we go. Yeah, I end up catching it right off of 156. So it ended up doing a double bottom. Double bottom is basically a W pattern. If you're not familiar with that, I have a couple videos that can be able to help you out. But here we go. Support went back up, went back down. There goes your double bottom. Market is popping back up because we're in consolidation. Quick and easy thing to remember. Quick and easy thing to remember. If you do play support, you do the support resistance game. After the market ends up hitting its third time or second time bouncing, instead of trying to take it all the way up to resistance, I always say take it to the halfway point. If you're taking it to the halfway point on this one, we know that the resistance at this point is 160, 162.20. We know that the support is at 155. I'm going to say 155.60. The halfway point will probably end up being right around 155.80 on 158.80. So you probably got another 100 points out of this that you can be able to get safely before you may end up seeing a little bit more hesitation from people for being able to push it back up. This would be a good time to be able to go in the trading view and let's take a look and see what the let's take a look at the volume profile. Euro United States dollar is not going anywhere. Jeez. I think retail sales is going to end up. The retail sales has got to be the catalyst that's going to make that pop. That's a great looking pocket. What did I say? 158.80? I believe I said 158.80. Let's see. Yeah. Okay, so from a vortex position, we're taking a look at this. Obviously, we end up having consolidation in high volume nodes right here and right there. We can see that there was another consolidation that was kind of built out right in that same spot right here, not as defined as you typically would like, but there goes your support. After they end up breaking out of that overall position, we have a free run area. We've had two free run areas in this same position before. So Fatty, you're in a great position if I'm being very honest. We end up having one that end up happening on December 30th until the 1st. Then after that, we end up having it again on January 4th, where you end up having that same run. We're basically back in that same area overall when it comes down to that position. And this is unfair market prices. You're not familiar with if you're not familiar with unfair market prices, this is a very good position to be able to make profit off of. I'm just being very honest when it comes down to that spot. If you're going to end up getting out to be safe, Friday, I would say 158. I'll say 158.50. 158.50 would be the safest position. If we go based off of how we end up treating the rule, we go from the high volume node that it left from to the next high volume node that matches up. So this is the high volume node that it left from right here. This is the next high volume node that matches up with that. That will end up being 158.80. There we go. So 158.80 will end up being my position and where I would look at being able to get out when it comes down to that position. If you're not in, let's say, got in a good entry on the 30 chart this morning, 157.13, 157.13, 157.13, 157.13. You caught it right when it popped. Nice, 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 nice. If you're not in at this particular point and you would like to be able to take a look at being able to get into the pound yen, when it comes down to this movement, I would take a look at the 15 minutes, see if there's going to end up being a counter trend line break. The market has broke out and retested already, but the 15 minutes in a sell zone, so it wouldn't surprise me that there might be a little bit of a retracement that may end up happening. Once that happens, look for a counter trend line break. Once you get it, look for the pop to be able to happen. The question is, where could that retracement be? Take a look at the 5 minute and let's see if there might be some help based off of that. The next highest high volume node that may end up popping back up to where it might fall down to is at 157.30. 157.30 might end up making that move. Brian said it was at the 38.2 field, which means that 38.2 field from the upside or the downside, Brian? Upside or the downside? Did you do an upfield or a downfield? Okay. Jeez, come on now. A, B, C, D. A, B, C, D. Yeah, I'm saying 157.30 is probably that position. Did it off of H4. I'm doing off of 5 minute. I know I was going to end up being a little bit different. If you're looking at being able to get in, I'll say anywhere right around this 157.30 area with a strong counter trend line break. It has to U-turn for you as that happens. You can be able to catch it right around that area. Then after that, I'll take that a little bit more seriously. But I do like the trade. I do like the position overall. It does not have a U.S. base move based off of it, and typically pound yen moves somewhat fast. So got a lot of the makings of a trade that you can be able to get in and get out of over the course of the next 1 or 2 days, if with the right volatility, obviously. So there we go. I got to move quick. I'm going to do one more pair. I'm going to take a look at what's happening with US 30, and then after that, we get out of here. I'm still going through and taking a look at some of these trades. I still have not got triggered in on. I still have not got triggered in on anything when it comes down to what we have with our yeah, anything that's happening with the prop firm challenges, US 30 has not hit, NAS 100 has not hit, US uh, Euro United States has not hit as yet, which I'm actually fine with. Don't want to take a bad trade. Um, but we can clearly see that US Euro United States dollar is getting caught up in a lot of consolidation. Let's see. Da, 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 da. The capital.com. Wasn't a 5 minute. I know that for certain. So we talked about this a couple days ago. We talked about two easy trades based off of being able to get caught in that 33 position. We ended up doing one on Thursday. That one ended up hitting. We ended up talking about as soon as it ends up breaking above, um, as soon as it ended up breaking above 33,890, we end up saying that we could be able to get out at 34 100 and be able to make that move as well. That was an easy, quick. That was an easy and quick 100 pips off of that as well when it came down to that movement. So that's another winner. My problem with this and block, I'm gonna say this because you said it. Obviously, no manual trades for this year. That's two winners right there. If I would have just had in the prop firm challenges, that I probably would have. I don't know. I probably would be in a position to where I could be able to say, "Hey, I'm resting comfortably." So I might just do a challenge just based off of manual trades, just based off of the idea of this. But um, right now, wait for the consolidation to be able to kind of play itself out. The next position of where it's going to end up going, it will be at the top of the resistance at 34,670. The market has to consolidate first. It has not consolidated as of yet. We can see that the VWAP and the moving average are starting to converge a little bit, and we're making a little bit of a triangle. So um, there's going to be some movement that's going to end up happening in the near future. I don't know what that movement is going to end up being because we're in consolidation, and anytime that you're in consolidation, you don't know what's going to end up happening overall. Um, no, if I'm going to do it, I'm just going to do manual, and I'm just going to have a automated one. I want to make sure I have the right data. I got to keep the data. I got to keep the data separated for me. But market's inside of a triangle until the market ends up breaking out of that position. It's nothing to really do. Everybody, I gotta go. I gotta get ready. I gotta get ready for school, and we end up going from there. But if you like what I end up doing, please make sure that you end up clicking on that boost button, or make sure that you end up obviously clicking on that subscribe button as we go through and getting everything else done. On my Trade with Travis page, I'm just gonna be honest. I have more videos than I do subscribers, which is hilarious if you really think about that. But um, eh, eh, if you like the content, you like everything else like that, don't hesitate to make sure that you end up placing in a sub when it comes down to that position as well. But like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next video a little bit later on. All right, take it easy.